reminder, Margaret.
Okay.
All right, so let's go ahead and get started. It's 11:05, okay, guys? So
Sure.
good morning, good early afternoon. Thank you guys for joining our webinar titled COVID-19 Webinar for Small Business Financial Assistance. My name is Justin Wong. I'm the president of ARIA Greater East Bay. What is ARIA? ARIA is the Asian Real Estate Association of America. And specifically, we are the Greater East Bay chapter covering the Alameda and Contra Costa County. What is ARIA in a sense? It is AAPI homeownership, sustainable homeownership, and we extend to now 42 chapters across the country. We just welcomed our new brother and sister chapter in North Carolina, and we have about 19,000 members for ARIA. Specifically, before we get started, just wanted to give a shout out to our new annual sponsors for 2021. So a shout out to our diamond sponsor in Bank of America and our sponsors in Wells Fargo, HSBC, Citibank, Union Bank, and Bank of the West. More specifically, I wanted to go ahead and give a shout out to those that helped make this event possible. Margaret Lind is our events chair. Eric Relos is our commercial chair. They are part of our board for ARIA Greater East Bay. So having said that, Margaret is here helping us with the Q&A. Eric Relos will be our moderator, and we have two great panelists for this event. I'll go ahead and pass this off to Eric Relos, our commercial chair.
Great. Thank you, Justin. Also, thank you to our speakers, our committee members who helped put this event together. And of course, our GEB, Greater East Bay members in attendance. As Justin mentioned, I am the 2021 commercial chair. Last year, I was the mortgage chair for the Greater East Bay chapter. So the goal of this webinar is to educate our membership and attendees by providing them with the latest PPP information, that's Payroll Protection Program, and the forgiveness process, and also educate them on the tax implications when the time comes. At this time, I'm truly appreciative to have our guest speakers share their expertise with us, and it's my pleasure to introduce them. Our first speaker is Julie Claus. She began her career with the Small Business Administration in 1997. She's currently the District Director of the SBA's San Francisco District Office, where Julie oversees delivery of SBA's programs and services within 14 counties in Northern California. And before coming to San Francisco, Julie was the Deputy District Director for the Washington Metropolitan Area District Office, and that's where she oversaw a large 8A portfolio. And then prior to doing that, she was Chief Marketing and Outreach Attorney for the SBA's Office of General Counsel. Julie completed her BA in International Studies from Bradley University in Peoria, Illinois, and a joint MBA JD from Wayne State University. She's a graduate of excellence in the Government Fellowship Program and the President's Management Council Fellowship Program. Following Julie is Pauline Dumas. Pauline is a director at Baker Tilly, which is a leading advisory, tax, and assurance company. At Baker Tilly, Pauline focuses on delivering business solutions to her clients. She spent several years in public accounting as well as private industry, where she was responsible for defining corporate strategies. Pauline's expertise is in tax, mergers and acquisitions, due diligence, and preparing her clients for PPP. She completed her bachelor's in finance from Cal State Polytechnic University in Pomona, California, and her MS in accounting from the University of Nevada, Las Vegas. Justin mentioned before we hand off to the speakers, I just wanted to let everybody know that there will be time at the end of the webinar for Q&A. Please use the Q&A button at the bottom of the screen, and your questions will be presented to speakers. So without further ado, Julie, please start us off with the latest update on PPP, with Pauline following to discuss forgiveness and the tax implications. Your floor, Julie.
Thank you, Eric and Justin. Good morning to everybody. So I'm happy today to be invited to talk to you about the Paycheck Protection Program. But if we go, I think at least one more slide. Yes. Before we launch into a little bit more detail about PPP, I always do like to just make sure people are aware of the other COVID-related funding programs that are out there, just to make sure everyone understands what's available and is able to take advantage of all the programs that may benefit their business. So before we get into PPP, as you can see on the screen, I was just going to give you some quick updates on the other programs. Kind of the sister program, so to speak, of PPP has been EIDL, or Economic Injury Disaster Loan Program. This is a working capital loan. It's actually direct from SBA, unlike the PPP program, which runs through lenders. EIDL is direct from SBA, and it's working capital. So it is often a good complement to PPP, which focuses on payroll. EIDL, you can use it for any ordinary business expenses, including payroll, but you can also use it for pretty much everything else as well. This is a loan that's not forgivable, but it is on very favorable terms. For businesses, it's 3.75% interest rate with a automatic 30-year term, and the payments are deferred for at least 1 year. So this is a great program to look into if you need working capital resources in your business right now. The other program that is starting to generate a lot of interest is the Shuttered Venue Operators Grant. So I don't know if we have any shuttered venue operators or promoters on this call, but this is a grant program. It is brand new. It comes out of the Economic Aid Act. It is not fully launched yet. It is not fully operational, but it is coming soon, and we do continue to put the information on our website. We are basically updating it usually on a weekly basis. Since this is a group of businesses that we haven't worked with a lot in the past, we are leveraging some of the trade associations and others out there to give us really good feedback, so that when this program does go live, it can be very well tailored and targeted to reach this community, since a lot of these venues have truly been shuttered since last March, and are probably not going to open in the next couple of months either. So stay tuned for that one, and check our website for weekly updates. And then the other that I like to point out is our debt relief program. So this was launched first under the CARES Act, and also has been refunded in part under the Economic Aid Act. This program doesn't get a lot of publicity, but I think it's fantastic. If you have pre-existing SBA debt, so this could have been in our 7A program, our 504, or even our micro lending program. So prior to COVID, pre-existing SBA debt, SBA is making at least partial principal and interest payments on your behalf to the lenders. So the best way to tap into this program and get more information is to actually talk to your lender who holds the loan, or you can always reach out to us in the district office, and we can provide you more information. Some preliminary information is also available on our website. But to enroll in this, so to speak, if you haven't already, is through your lender that holds the loan. So they are a key component in this program. But now let's talk more about the Paycheck Protection Program. But if we go to the next slide, I do have a quick crosswalk for everybody. This is one of the questions I often get is, well, can I get PPP and EIDL, or can I get this loan and this loan? For the most part, you can use multiple programs. You usually just can't use them for the same purpose and costs at the same time. The one exception I want to point out, though, is the Shuttered Venue Operators Grant and with the PPP program. So you cannot apply for the PPP program after December 27th of 2000 and also obtain a Shuttered Venue Operators Grant. But for the most part, the other programs you can do in tandem to help support your business needs. And next slide, please. So if you had any familiarity with the Paycheck Protection Program launched by the CARES Act last summer, you'll see that this program is the same, but with some differences, hopefully some positive differences for many people. So overall, we've expanded how funds can be used through non-payroll costs. So payroll costs stayed largely the same. Basically, your salaries, wages, bonuses, health insurance is included in that, other benefits, other premiums. If you have sick leave and other benefit programs, all that can be bundled into the payroll costs. Non-payroll costs now have expanded to include not just rent, utilities, and mortgage interest on your business loan or a business property, but they can also include now PPE, or I should say providing any sort of protections that you might need for your workforce. So it could be buying PPE, it could be building barriers, erecting physical barriers, or any other things that you need to do to help protect your workforce and operate your business. It can also include any supplier costs. These are for your ordinary business expenses and suppliers that you're utilizing on a regular basis. It can also include some operational expenditures. So this is things like if you hire an outside accounting firm or an HR firm to help you with your business, or if you have like a software subscription that you need in order to provide some services, these things can all now be included and under the non-payroll cost bucket. So there are some broader ways to use it. The thing to be mindful though is that 60-40 split we always talk about, meaning in order to have the loan forgiven, you need to spend at least 60% of the loan on payroll costs and no more than 40% on these non-payroll costs. That criteria remains, but you do have an expanded range of ways to use the funds. We still have this concept of a covered period. That's simply the period of time you use to spend the funds. And that will range from anywhere from 8 to 24 weeks. Obviously, we can give the option for a second PPP loan if you meet that criteria, which we'll talk about in a few minutes. And they corrected some of the IRS rules, which I think Pauline is going to talk a little bit more about. And they also now have a new streamlined forgiveness application for people with loans of $150,000 or less. Next slide, please. So there's some new terminology that I just like to make sure everybody understands. We refer to loans as a first draw loan and a second draw PPP loan. So first draw is simply just referring to the very first time an applicant applies. So this could have happened last year for people, or they could be applying right now for the very first time. That will be their first draw loan. The second draw loan will then be the second PPP loan that you applied for. These first draw loans now, well, all the loans actually include also an expanded list of eligible entities. And they also include the ability to look at, you can basically pick your benchmark year, if you will, on when you want to do these calculations. You can use your 2019 payroll data, or you can use your 2020 payroll data if that's more advantageous to you. So you may use either 2019 or 2020 data to help you calculate how much you could be eligible for under this loan. There are some guidance documents on our website that I do recommend people look at. There's one that's associated with the first draw loan, and then there's another document associated with the second draw loan. These will walk you through how you do the calculations based on your business entity and type, and give you scenarios so that you know exactly how to calculate, where to grab the information and the data from, and how you can calculate how much you can be eligible for under this program. The one thing that applies again across the board also is that businesses had to have been in business as of February 15th of 2020. So that is the other eligibility criteria. On the next slide, though, we have a list, I think, of all the entities that are now eligible to apply for first draw and for second draw. So in addition to the list that existed under the CARES Act, we have added more nonprofit organizations for the most part. So 501c6s are now eligible. Also, different types of cooperative, whether you have housing cooperatives, or even electrical or telephone cooperatives are eligible, as are destination marketing organizations. And these can be private or quasi-governmental organizations, but they are now eligible to apply for PPP, as are certain types of news organizations. So good news, as more types of businesses are now eligible. The second draw PPP loan. So this is probably what many people have questions about. The second draw, this is the loan that people have already gotten their first draw PPP loan, and now they're interested in a second loan. So in order to qualify, obviously you've had to have your first loan. You do not have to have your first loan gone through the forgiveness process though. You just needed to have used all of the funds from your first draw loan in order to apply for the second draw. This is also, you need to still be an entity, one of those eligible entities. The size standard does shift a little bit though, it shifts downward. So maximum number of employees you can have is 300 in order to qualify for the second loan. And then we have a new component, if you will, that we suffered at least a 25% reduction in gross receipts. This is comparing 2019 to 2020. And as long as at least one quarter between 2019 and 2020 shows a 25% reduction in your receipts, you can qualify. So I usually recommend businesses first look at 2019 and 2020 in total. And if you have a 25% reduction in your receipts across the board, you qualify, and that's easy. But if you don't, you might have to do a little bit more math and break out your receipts on a quarter by quarter basis so you can compare like quarter 1, 2019 to quarter 1 of 2020 and so on, to demonstrate at least one of those quarters, probably quarter 2, showed at least a 25% reduction in receipts. So that's the quick way to look at that. And that guidance document I talked about also walks you through that 25% reduction criteria as well. I do want to talk about the process a little bit, because if anyone's, especially if you went through the process last year in 2020, it's a little bit different this year. It is still, you still have to go through one of our participating lenders, and there are a lot of them. And if you don't already have a lending relationship and are looking for a bank, we do have some tools on our website to help you through our lender match tool, or there's even a Paycheck Protection, find a PPP lender near you. You type in your zip code and it'll show you who's closest to you. You can also reach out to us in the district office. We do have a list on our website of banks that have said that they're participating in the PPP program locally. You're going to complete the application. There is a separate application for the first draw and the second draw. So just please be mindful, depending on which category you're in, that you complete the proper application. Many banks have automated this, so you might have to go to their website to fill out the form and upload any supporting documents that they require. From there, the bank is going to take it in and do a preliminary processing of it, check for some eligibility, and make sure that everything looks fine and that it meets the criteria. The SBA then is going, or sorry, the lender is then going to reach out to SBA through a special PPP portal we have with them. And this time around, SBA is doing compliance checks as soon as we receive those PPP applications. Last summer, we did it on the back end. This summer, we're doing it on the front end. So that is going to add a little bit of time to the process. If anything is flagged, then SBA will communicate to the lender, and the lender may come back to you and say, hey, I need some additional documentation to prove, this, or this. So if you do get contacted by your lender and asking for additional documentation, just please be as responsive as quickly as possible so that we can continue processing and moving this forward. Last week, though, on the 11th, SBA did give these lenders a little bit more authority in order to clear some of these issues themselves without having to wait for SBA. So one of the most common is a mismatch with people's EIN numbers due to typos and other things. So just wanted to let you know the process is taking a little bit longer, but it is moving. I think we're at about $150 billion already approved in the PPP program right now. Next slide. I think I have some contact. Oh, so one quick note, if your loan is not forgiven or partially if part of it's not forgiven, it will convert to a loan of a fixed interest rate of 1% with a 5-year term. And the lender will communicate all of that to you at the end of the forgiveness process. And next, I'm not going to talk too much about, Pauline's going to take the deeper dive into forgiveness. So if we go to like the next slide, here's some information on local resources. We have SBDCs and other business advisors do stand ready to help you with this process. So you do not have to do this all by yourself. And you can always reach out to us in the district office as well with your questions, and we will try to help you as best we're able. So I will kick that over to Pauline now.
Great, thanks, Julie. And Julie's been helpful with some of special cases that we've encountered at Baker Tilly on helping answer some questions and some of the remediations because of some of these front end checks that she'd mentioned earlier. So, so my goal is just to really focus on the loan forgiveness process and tax implications of the PPP loan if they are forgiven. So, Julie mentioned earlier, there's different applications, and I know a lot of you may be sole proprietors. So, there's a lot of different forms within the lender portal that you need to understand so that you know which application to complete. From our experience, our firm's process, hundreds, if not thousands of PPP loan applications for our clients on the more complex side. So sole proprietors now with the loan amount under $150,000 is a much more streamlined form. So, if your loan's under $150,000, it's much easier for you to complete, and most likely you won't need a third-party advisor to complete. I know, a lot of our borrowers are nervous regardless because they want to make sure it's a forgiven loan, or i.e. a grant, versus having to pay back. So a lot of times they'll even have their tax advisors, whether it's Baker Tilly or one of their CPAs, review it before they submit it to ensure 100% forgiveness. So if this isn't something you're comfortable with, definitely work with your third-party accounting person, your CPA. Make sure someone reviews it before you submit to ensure that you met all of the criteria for forgiveness. So I'll talk about the 3 forms that exist. I think in your case, and for most of the attendees here, you're probably dealing with the form 3508S. So when the CA was signed by President Trump on December 27th, it basically increased the amount of the PPP loans from $50,000 to $150,000 to use this form 3508S, which is a straightforward one-page form. It's pretty simple to complete, just ensuring that if you have any employees that make over $100,000 a year, you need to cap their forgiveness amount to $46,154 if you're using the 24-week covered period. And if you're using an 8-week covered period, it's $15,385. Also, using the new form, you just, once you complete the first page, the certifications just need to be submitted, and then you just need to provide the payroll costs and any other, non-payroll costs used towards forgiveness. And, depending on your lender, the process of submitting these forms can be somewhat arduous. If you're using a large bank like Bank of the West or City National Bank, they have a lot more requirements than if you use a smaller local bank that, really just uses the PDF form from the SBA. You complete that and submit that, via their portal or through your lender. So the process can vary quite a bit depending on your lender. So definitely talk to your banker if there's something you can talk to. Otherwise, banks in general have been sending information to their borrowers to make sure that they understand the process and meet all the certifications and are okay to sign it before they submit. The second form that exists is the form 3508EZ. So if your loan's over $150,000, you either have to complete the easy form or the full form, the 3508S. And there's really not a good way to determine that until you kind of run through the calculations and the qualifications. So the first qualification is that you didn't have any salary reduction or headcount reduction from the time of January 1st, 2020 to the end of your covered period. If you can meet that certification, then you can use the easy form. There is a lot of computations, like I mentioned, with this form. So a lot of people are like, well, we have employees that used to work 40 hours a week, but now they work 30 hours a week, or their wages changes because, they're an hourly employee. So really the focus is to make sure it's your hourly rate, not the total wages, because the total hours worked is actually used for the FTE calculation. So if someone was making $20 an hour and they still make $20 an hour, you can at least meet the certification that you did not reduce the salary reduction. The headcount reduction, does have to be calculated. And so essentially you want to make sure your headcount or FTE, between January 1st and the end of your cover period did not get reduced. And if so, then you have to file the full form. The other qualification is, let's say your clients or you are restricted due to COVID for your business. So for example, Eric mentioned earlier, they have a lot of restaurant clients, right? And those clients are required to shut down due to government order. And if that's the case and they still didn't reduce the salary of the employees, they can still file the easy form. We have a lot of restaurant clients in the San Francisco Bay Area, and churches, schools that also are electing this instead of having to do the full calculation to complete the full form 3508 because they meet this requirement. So if you can meet any of these two qualifications, you can use the full 35, you can file the easy form. Otherwise, you have to fill out the 3508 form, which is much more difficult. I'm not going to go through that. I know in speaking with Justin and Eric yesterday, I don't think a lot of the participants in the call today will have to do that. If anything that's come up where you're not sure, feel free to send me an email or Julie an email, and I think we can guide you towards what makes the most sense for you. I know we get a lot of questions at Baker Tilly on the loan forgiveness timing, especially right now because a lot of the lenders are closing their portals because they're trying to update them for the updated applications that were issued on January 19th. So don't worry. You have 10 months from the end of your covered period to complete the application. So your covered period is up to 24 weeks from the time your loan was originally dispersed. So basically it's 167 days from the date your original disbursement occurred. So for a lot of borrowers, that's summertime. So if your bank right now has the portal closed, no need to worry. They'll be back up again. I know a lot of our banks have closed their portal. They're planning to open it back up mid-March. And at that time, you can update your application or complete your application and submit it at that time and not have to worry about, meeting a deadline and not getting forgiveness. Let's see. There also is, I don't know if you guys necessarily have any loans over 2 million, but you may have clients or people in your network that do. So there's two forms that were issued kind of late last year, which is called the PPP Loan Necessity Questionnaire. That's a questionnaire for any loans over 2 million together with their affiliates. So if you are working with, any businesses or your own business that, collectively have loans of over 2 million or more, each one of your entity needs to file a Form 3510 for for-profit businesses and 3509 for for-profit businesses and 3510 for nonprofits. And so it's a pretty long questionnaire, and essentially, the SBA wants to assess, all certifications and, the financial revenue and cash positions and various other components of, what happened during COVID to ensure that when they go and review the application for forgiveness, they're looking at it collectively and making sure that, the borrower has met all the certifications before the SBA makes a decision. I know Julie mentioned all of the PPP forgiveness changes, so I'm not going to go through that. But again, at the end, these slides are for you guys. Justin, Eric, feel free to share with all of the members in your chapter so that they can read through this. And if they have questions, reach out to Julie and myself. And then I want to talk quickly on the federal tax implications. Really, at the end of the day, you don't need to know all the IRS notice codes. Originally, the CARES Act mentioned that these loans, if they were forgiven, would not be taxable. But what has happened was there's been a lot of changes in terms of what the federal government decided in terms of, you know, how the loan or the loan converted to grant is going to affect your taxes. So I think I'm not going to go through the history of all of it. At this point today, from a federal tax perspective, you're not going to be taxed on the grant, and you are allowed. There is originally no deduction on the expenses that you use for the PPP, but that's been now overruled. So if you had PPP loan proceeds that you use for any taxes, you can actually deduct those expenses as well. So it's favorable. That change, you know, in December, and made a lot of our taxpayers happy, because obviously the goal of these programs is to provide relief to borrowers. One big change on the state side today was announced in the state of California. Originally, you know, California was not going to conform to the federal rules, meaning that, you know, even though you got your loan forgiven, the expenses that you use using those PPP funds would not be deducted. The California state now has issued a ruling that you can deduct up to $150,000 expenses towards your California state return. So if you had, you know, a $300,000 loan, now you can deduct up to $150,000. So then only $150,000 if you had a $300,000 loan would not be eligible for deductibility for your California state income tax. There are other credits that are also eligible. If you have, you know, R&D tax credits won't really apply to you, but employee retention credits are a pretty big one. When CAA was signed on December 27th, PPA recipients are now eligible to claim an employee retention credit in addition to the PPP. Prior, this employee retention credit was either or. So now with that change, the IRS has not issued guidance on how that would work. But essentially what that program is let's say you had $10,000 in wages for your employees, and because you had PPP loans, let's say you had $5,000 towards PPP. Now you have a bucket of potential wages of $5,000 that you could potentially apply towards this employee retention credit. And that $5,000 now you get up to 50% of the eligible gross wages towards an FICA tax credit on your tax filing. So if you yourself have may be eligible, and there's different eligibility criteria, definitely reach out to your tax advisor. You can reach out to us at Baker Tilly, and we can, you know, let you know if that is a program that may be eligible for you, and you can then apply through your payroll provider to amend your 941s for the credits in 2020. And then, of course, there's credits for Q1 and Q2 of 2021 as well. And that's all on the presentation. I know now, you know, Eric and Justin, Margaret, we're going to go through Q&A.
Sure.
Okay.
Great. Thank you, guys. So go ahead. We're going to go into the Q&A. Shut off the share screen and let's get to the Q&A. Margaret, are you there too?
Yes.
Yeah. Okay.
Hi, this question is Julie. Number one, what supporting document are required for PPP application?
For the application itself is obviously the application. And then usually whatever the bank might ask you for. So sometimes this will be some documentation about your business, like your tax returns or your business expenses. I tell people to be prepared to have their tax returns, financial statements ready. They may or may not need to submit them depending on their situation. And then also if they have payroll records, if they use an outside service, usually you can get them to run a report for you, or if you, whatever you do internally. I always tell people to be ready for that. You might not need to submit it from day one, but it might be something that's asked of you in the review phase. So initially, it's really the application, especially if you're asking for $150,000 or less. But then there might be some additional documentation that's required as it's reviewed.
Hey, Margaret,
you,
real quick,
Julie.
I got a couple of questions that popped up while Julie was presenting. So if you don't mind, I'd like to chime in to ask her. So regarding the Shuttered venue program, is that for businesses that have entertainment venues? Is that what that's for?
Yes, it's basically it's live venue operators or promoters, theatrical producers. It can include museums, zoos, and aquariums in some cases, talent representatives, motion picture theaters, usually the independent ones. So it has a variety of different venues, and then people in the entertainment industry really that are supporting the venues. So the definitions, some of the definitions are more fleshed out than others. So I do recommend people look at the FAQs document we have on our website. That'll give them the most up-to-date information on who is eligible.
Okay, the reason I asked is I know the owner. They have a venue, so they have a restaurant portion of the business, and then they have a separate bar area. And typically over the weekend, they have live bands providing entertainment in that area. So of course, they make money because the place is packed. And then also in some of their larger rooms, they rent it out for events, and sometimes they have even larger bands play there. So that kind of business, although there's a restaurant component, although it has this entertainment venue portion, that's eligible for that program.
That's a maybe, because we probably have to take a deeper dive into their source of revenue, where their gross receipts are obtained, like where the majority of their receipts are retained from. Is it from the restaurant side, or is it the entertainment? And then looking at the venue itself. If they look at the FAQs, they'll see a little bit of information about the live venue. There are some criteria, some of it involving potentially like how the seating is arranged, and if there's a more permanency versus whether it's a transitional space. So I do, and that's all still evolving. So that's why I do encourage, I'm trying not to dodge the question, but I'm still learning with everyone else too. So I do recommend tracking the FAQs. They're typically updated on Fridays, I'm finding. So we have some updates last week, and we will probably have some updates tomorrow.
Okay. And second question regarding debt relief programs on new loans. So, for example, I just received an update that one of the SBA loans that my client applied for was approved today. So my understanding is that, if that loan closes, is it a period of like 6 months where the payments are covered by SBA?
Yes. So if it's closed between February 1st and September 30th of this year,
Yeah.
they can be eligible for 6 months of payments.
I'll make sure my loan officer is aware of that.
Yeah.
Margaret,
The lending community calls this program the 11-12 payments, because that's where it fell in the CARES Act originally.
Okay.
But yeah, we've been doing education with the banks. They get a lot of notices from us about how to do this, and how to tap into, how they need to report to us to enroll these loans into this program. So
Okay. And Margaret, I'll hand it back to you.
Okay. Second question, for second draw, the 25% reduction is full year, right?
You only have to show a reduction for 1 quarter. That's a minimum. So if you look at 2019 revenues and 2020, and you all across the board do have a 25% reduction, then you don't have to do any more math. I tell people you're done, you've met the requirement. But if you don't, you'll want to break it down on a quarter by quarter basis. So first quarter for 2019 versus first quarter 2020, and same with the second, third, and fourth quarter. And as long as one of those quarters shows at least a 25% reduction in your revenue, you will qualify.
So you can present 4 quarters, and as long as 1 quarter shows a 25% drop,
Yes.
they're
yes.
good.
Yes.
Wow. Okay.
Yeah, I'll add to that too. I know a lot of our borrowers are like, when am I supposed to submit to demonstrate it? So the SBA did issue guidance in the latest IFR that says, for sole proprietors, especially sole proprietors, your bank statements, you literally highlight, what is gross receipts for you and compare that using your bank statements. For those that have an accounting system, you can run the reports that show the quarter-to-quarter reduction. Because they're not audited, what you have to do is sign the first page and date it, and then any subsequent pages initial and date them. And the bank requires that to be submitted for the application.
Okay, thanks,
Okay,
Pauline.
thank you. So
And there's, I was
Go
just
ahead.
going to also add that the guidance document we have on our website for the second draw PPP loans, it also walks through this 25% reduction, how you calculate it on different businesses, even like some of the nuances for nonprofits, what they can include and not include. So it is a helpful tool to help you navigate that 25% reduction criteria.
Thank you.
Thanks.
So third question, what supporting documents are needed with second draw application? I think you mentioned
Yeah, I feel like we kind of just touched on that.
So number 4, what is the balance of funds available for PPP?
I don't necessarily get up to the every single day updates, but the last report, the report from earlier this week, I think we approved around 150 billion right now. So there's at least another 100 billion still available.
Thank you.
Margaret, you
So-
could probably pass on the next question. Just go to
Okay.
question. Yeah.
So number 6 is, what is the criteria for determining whether a business qualifies for and receive an EIDL loan?
I'm sorry, the business, you broke up on me a little bit there. So the business,
What is the criteria for determining whether a business qualifies for and receive an EIDL loan?
okay. So in order for somebody to apply for the economic injury disaster loan or EIDL loan, they basically need to be a small business or a nonprofit.
Hmm.
And we've even expanded the types of industries. So I think you'll be hard pressed to find an industry that's not covered right now, but a small business or nonprofit, and you will fill out an online application form, very streamlined, and you will submit that. Basically, you just need to enter some of your basic financial data about your gross receipts, cost of goods sold if you have them, and a few other things. And then SBA will do a calculation how much you might be eligible for under this program. And it's typically around 6 months of working capital right now. And
Okay.
so up to $150,000 right now. And then SBA, for those that qualify, we basically will close the loan and disperse the funds directly from SBA.
Hey, Margaret, you could probably skip the next 3 questions because those were answered in the presentation, but
Okay.
I do have a starting question for Pauline. On the easy form, right? If you're completing that for forgiveness, do you need both qualification 2 and qualification 1 and qualification 2, or either of those will suffice to qualify to file form easy?
It's either or. So, and within number 1, there's 2 different criteria, but either one of those would work.
Okay. So now this
Okay.
question is for Pauline. How does it take to get a decision on whether loan is forgiven? 60 days from receipt and 90 days to approve and remit.
Okay. And so based on our experience, we've seen it range from 60 days to, up to 4 or 5 months. So it really depends on the complexity of your loan, your lender's queue, because, there's physical people reviewing the documents. So if you're with Chase, they probably have a lot more in their queue than a community bank, right? And so it really just depends bank to bank. But, we've seen anything from as quick as 60 days to up to 5 months.
Okay, thank you. So PPP loan is necessity questionnaire. Have you run into example of business that were determined to be eligible for the loan or forgiveness?
So that Form 3509 and 10 is a questionnaire that you submit with your application for forgiveness. So it doesn't determine whether you're eligible for the loan. It's only for the forgiveness portion. And so you'll have to work with your lender to submit it. We really don't know the process on how it actually gets requested, because I've had borrowers that have submitted their application a long time ago and the lenders never submitted it, requested for them to fill out that Form 3509 or 10. Our experience is, our recommendation is do it now because you know it's coming. And so have it ready. So when the bank does request it from you, you can submit it or submit it in advance with your application.
Okay, thank you. Can you give example for IRS Notice 2020-23 and Revenue Ruling 2020-27?
So real quick before you answer that, Pauline. So those rulings have. I wanted to make sure I understood. Those were overruled.
Correct. So now essentially you can deduct all expenses on your federal tax return for any proceeds used from your PPP loan for eligible expenses on your tax return. And then in the state of California, you're allowed deductibility up to $150,000.
And were they overruled based on the most recent stimulus package, the Economic Act? Okay.
Correct.
I see. And then I did have one question regarding the taxation at the state level of the PPP forgiveness. So has it changed? Is it still taxable? Is the PPP taxable at the state level as income?
No. So the grant itself is not, but the expenses related to the use of those proceeds are capped at $150,000.
Okay, so kind of using an example. So if a business received PPP of 200,000 and then they spent a certain amount on, I guess, payroll, how much of it is taxable then? I'm trying to understand that.
So the way it works is you're not going to be taxed on the grant itself, right? Assuming that you got all 200,000 forgiven by the SBA,
Okay.
right? So if you're doing your tax return, you don't count the income for the grant itself, but from an expense perspective, you can only deduct up to $150,000 in the state of California.
Oh, okay, got it. So if I receive the $500,000 PPP, I'm limited. Oh, the 500,000 is not taxable, but I'm taxable on 150.
You're taxable on 350 because 350,000 of it isn't going to be allowed as a deductible expense your. Yeah.
So basically, they lop off the 50 off the top from the 500,000 in my example, and then the balance is taxable.
Not taxable, not deductible as an expense to get to net income. So it's not like you're getting taxed on 350. So it's just the way that you calculate what your net income is for the year.
See. Okay, got it. Because I'm not basically saying that it's income, then the expenses it's not included in order to determine my taxable income.
Correct.
Okay, got it. Okay, that clarifies it.
I got some, if it's okay. So I'm going to take a couple of Q&A questions from the audience, and it's bunched together pretty much. It's qualifying questions. If you're behind filing your taxes, can you still qualify for a PPP? What qualifies better, a tax return with high income or less income in case tax returns are required? And then for an SBA loan, does low credit score, will that be a factor? Will you be denied because of low credit score?
Okay. Do you want me to start? So I'll start with the credit score. I'm presuming they're talking about the EIDL loan, and credit score is a factor, but I don't have like a hard and fast number for you, but it's really, it's pretty generous. So if someone has a really low credit score, like 400, yeah, they probably will not be approved, but it's a pretty generous spectrum. It's definitely not the primary thing that is being evaluated. The other questions, and I'm sure Pauline, you probably have some more insight too. If you're behind in filing your taxes, can you still qualify for PPP? Likely yes, but I would want to like understand a little bit more about that situation. Is it a matter of like you're on a deferment and you know, I don't know how far back we're talking, you know, 2019, or are we talking earlier? So as long as you are not in a position where you're considered delinquent on your taxes, you're probably okay. I don't know.
And then the last one, which qualifies better, tax return with a high income or less income, in case tax returns are required?
Well, I guess I don't understand the question. So if you're doing a draw one application, right, what you'll need to do is, you know, depending on which tax form you're filing, determine what your maximum allowable loan amount is, right? So if this is a draw one, you'll just need the 2019 or 2020 if that's been prepared. If it's a draw two, and you need something to demonstrate the 25% reduction. I know a lot of our clients are asking that. You know, the tax return won't be ready. You know, guidance is still actually coming out on IRS rulings in general. So if you need that for a draw two application, then use something else to demonstrate the 25% reduction, or you can wait till your tax return is filed to determine if 2020 will give you a higher loan amount, right? Because let's say your net income is higher, so you might get a higher loan amount. But just keep in mind, you only have till 3/31 to submit your application. So you'll want to, you know, plan that out with your CPA as quickly as possible.
Yeah, I was just going to build on what Pauline said and say, if you're looking to see how much you'll be eligible for under the PPP program in particular, your income is not what it's based on. It's based on your payroll costs. So that'll be derived likely from another source, although you sometimes from your 941s, for example, if you have employees, and you can use that information. And what she said about the second draw loan and the 25% reduction, that's where tax returns could come into play. I would be prepared to have your financials available and broken down on a quarterly basis, comparison between 2019 and 2020. I mean, we all know 2020 taxes are not due yet. If you want to fill out like a draft version of your taxes and have that for the bank, I know a lot of banks, you know, will accept that. But I think from my conversations with a lot of lenders, they're really expecting to see those financial statements on a quarter by quarter comparison.
Yeah, and the tax return are important for the sole proprietors because they won't have payroll. So it's almost like income replacement.
Schedule C. Yeah, if you are a Schedule C filer, I would go ahead. You might want to go ahead and try to do just a draft at least of your 2020 taxes.
So for Schedule C filers, are they just looking at the net income as the qualifying income?
I think it was like line 14. I'll have to look at the specific line, but there's the instructions that was issued on January 19th tells you exactly which line on the Schedule C. I think it's 14, but I'll look and I'll follow up with you on it, Eric, if you want to share with everyone, because if there's a lot of Schedule C filers, it'll be important for you to know where to look.
And those guidance documents, again, those will tell you where to grab it from on your Schedule C.
Do you know if there's going to be an extension of the filing deadline? I know it went through July 15th last year. Do you guys, have you heard if it's going to be extended for this year?
I have not seen anything.
Okay. Justin?
I think one more question, the last one.
Okay.
Provide example of employee retention credit for Pauline.
There's not really an example per se, but there's two qualifications. One, you have to be a small employer in 2020 where you have 100 or less employees among your affiliates. And if you qualify as a small employer, then what happens is, and let's say you have no PPP loan, because I think that adds some complexity, you have to meet certain tests. One is called a gross receipts test. If your revenue was reduced by more than 50%, you qualify, or you had a suspension. So because of government order, you're required to close. And in the periods of suspension, any wages there could be eligible for ERC. So if you're a restaurant, for example, let's say you didn't get a PPP loan, then the periods in which you were partially or fully shut down, those wages can be used towards ERC.
I see. Thank you.
Great. So let's go ahead and wrap this up. I know it is right around 12 o'clock. The last question that Julie thankfully answered was, do real estate agents qualify for first draw PPP loan as independent contractors without employees? And the answer is yes, independent contractors are eligible for PPP. So once again, Julie, Pauline, thank you so much for your time and your insights. Eric, Margaret, appreciate your time to put this all together. To our attendees, thank you so much. And just to recap, we do have a couple of events for ARIA. I want to give a shout out to our sister chapter, ARIA San Francisco Peninsula. Liza Fong and her board of directors will be installed tomorrow, Friday, from 4:30 to 5:30. Our own installation for our 2021 leadership will be next Thursday, February 28th, from 4 to 5 p.m. Pacific Standard Time. We are also doing, in regards to the community, in the month of March, we will be giving back to feed our frontliners, the ones that are working in the hospitals amidst COVID-19. We're going to take them out, serve them some lunch in the month of March, and we're targeting several hospitals in the East Bay. And then lastly, what I would like to say is just a big thank you to our annual sponsors. Once again, it is Diamond, Bank of America, Wells Fargo, HSBC, Citibank, Union Bank, and Bank of the West. Eric, Margaret, anything else to say?
Just want to reiterate a very, much appreciation to Julie and Pauline for being our guest speakers today.
All right, guys. Well, have a great week and take care, okay?
All right. And thank you,
Bye.
Pauline, for the follow-up. I saw the text.